Hi, and welcome to the initial interview. When you or your client get audited, the first thing that a revenue agent, and this is field examination now, always remember that, a revenue agent in the field exam or in an office exam called office examiners will do is to conduct the initial interview. The reason why they want to conduct the initial interview is to probe for many items that might be questionable on the return, or they want to ask questions beforehand and before they begin the audit. If you are viewing the screen now, please pause the tape and print the initial interview for individuals. This is the one that we will use for individuals. There is another one for corporations and partnerships. But let's go ahead and discuss the individual one because they're both about the same and they're both alike and so forth. So pause the tape and print it and then come back on and turn me back on. All right, let's go ahead and begin. When you have a client that is being audited, it is best that you conduct the initial interview with he or she. That way you will know what is going on with this individual. If there are any issues on hand, just resolve them before the audit and take care of it. There's a few things I would like you to follow with me on. That way I would like to review them so you can understand. If you look at the first page, have you filed all returns including last year? Have you filed your employment tax returns if applicable? Have you given anyone a gift of over $10,000? Be careful here. Here they're probing for compliance, number one. On any unfiled return, they need to be filed, and sometimes they might request you to file all the returns with them. And the second one is the employment tax returns. If you have employees, and the 941s haven't been filed, the 940s and so forth, make sure you get this done for your client. And again, if you're in business, you're there to make money, so here you can make more money. If you're representing yourself, make sure you also get into compliance with this. Have you given anyone a gift of over $10,000? If you've given anyone a gift over $10,000, anything over that is taxable to the estate, so be careful with this one here. Make sure you also address the issue. On the second page, do your children have any bank accounts? That's what they're doing here, is looking for an income probing, meaning do you take any money from the business and deposit the money in your kids' bank accounts? Is it not deposited in your bank account, and so forth? So also question this here. The middle of the page. Did you trade goods or services for other goods or services? This is what they call a barter exchange. If you have done this or your client has done this, address the issue, because a barter should be included in income. Most people say, oh, we just gave them my services and they did this for me in exchange. No, that should be included in income of the business as well. The bottom of the page, did you sell any assets, business or personal, during the year under audit? Here, once they begin the audit, they will do what we call a bank deposit analysis, and they will compare all the deposits with all the income claimed on the return from interest, W-2s, Schedule C, etc. There's any discrepancies, well, you know, maybe the individual has sold any assets in the year, an automobile, a house that wasn't subject to taxation. They've lived in it more than 2 years. They get that $250,000 for individuals and $500,000 that you don't need to declare under the capital gains. So address the issue there as well, if they've sold anything. Again, did you borrow any money? And if somebody borrowed 20 grand, they put it in the bank, they're doing the bank deposit analysis, and you know it exceeds what's on the return by 20,000. Okay, now we know where it came from. Very important. Turn to page 3. This relates to corporate and partnerships, but let's go down to the bottom of the page where it says, were there any loans from or to any corporation? If your client or you yourself, if you're an officer or a director of a corporation, you might have taken a loan from your own corporation. Well, be careful here, because sometimes we have individuals that do not draw a salary, and what they do is they take it out in loans. Well, that could be what they talk about here. It could be a disguised dividend. So they might turn around, look at the corporate return, and issue the dividends out, and now it becomes taxable to the officer because there's no loan agreement, there's no interest to the loan, there's nothing there. So it is a disguised dividend.